and put the spotlight on the overall GDP print. And Aurodeep Nandi is the India Economist Vice President at Nomura, joining in to discuss that. Thanks so much for taking time out. Just give us a sense as to what you believe is likely to be the outlook when it comes in particular to consumption growth, because that is likely to lag this time around. How much of a concern is that?
I think you're absolutely right. Consumption growth is likely to lag. I think the anatomy of the growth outlook in Q3 of the fiscal year is going to be pretty similar to what it was in Q2. And in Q2, yes, growth was strong, but much of it was driven by government on the spending side and government on the investment side. So we had strong investments, we had strong government spending, and what seemed to be lacking is growth on the consumption side. And we think that that seems to recur in the Q3 numbers. So our number is, again, it's still strong, 7.1% versus 7.6% in the previous quarter, this for the GDP. And it's still a sequential slowdown. So sequentially, the momentum we believe is going to be lower in this quarter. But the drag primarily is going to come from consumption. And look, I mean, consumption side has been a problem for a while now. On the one side, we have a very K-shaped kind of recovery, where the upper end consumers are essentially pushing a lot of the consumption growth. And the other thing is that on the rural side, be it in terms of, the terms of trade for agri, be it in terms for real rural wages, they have been they have been moderate. They haven't been quite high compared to relative standards, as a result of which consumption growth might turn out to be, it might be a bit better than last quarter, but it's likely to remain overall week.
Hi, good morning. This is Vinny joining in the conversation as well, Aurodeep. And, obviously you're talking about this K-shaped recovery, consumption side. That's the trend that has been going on for the last few quarters as well. Let's just talk and highlight in terms of, obviously, industrial side, this industrial sector. What is the expectation on that front as well? And, how do you see that moving from here on in terms of the numbers that could come in?
Well, we think that the industrial sector should do pretty decent. We have, I think, a growth rate of around 12% versus 13.2% in the previous quarter. And essentially what's driving that is that profits are good. And the reason why corporate profits are good is because costs have been relatively low, as a result of which, the profit margin has been good. What we are seeing is this dichotomy where sales are slowing, but profit margins are good, and which will probably sort of help with showing up in terms of a healthier industrial growth.
Also, I just have one more point that I want to know in terms of momentum from the construction side as well. What are you expecting there? Any sort of a slowdown that is expected on that front, or what is the growth that one should watch out for?
So construction, last quarter was tremendous, right? So it picked up pretty sharply. This quarter, when we look at the high frequency indicators for the construction sector, we see that there has been some paring down of momentum. So construction activity, although it's going to be a remarkably important part of the services basket, but we think that the kind of momentum that we've seen in the previous quarter may not necessarily recreate in this quarter. So consumption growth likely to moderate.
All right. Give us a sense as to what the outlook is then when it comes to the individual sectors performing. Where is it that you see the biggest lag for growth, and where is it that you will see the overall growth picture looking robust?
I mean, look, overall services should be fine. I mean, our number is around 7.2% versus 6.7% in Q2. Within that, financial services, real estate, professional services seems to have done fine. Credit growth, deposit growth have been good. again, as I mentioned at the very start, government spending should be there. So the public administration side of it should be pushing it out. But I am a little wary of how trade, hotel, transport, communication, which again is quite closely linked to consumption momentum in the economy, and how the construction sector will pan out. So again, overall, I think services should do fine. But within internally, I would be a bit careful on the trade, hotel, transport, communication, and on the construction side. Within industry, as I said, industrial growth should be okay. We would be very surprised if that falls quite a lot. The other thing to watch out for is the agricultural sector. Now, the Kharif production has been quite poor. It's been over -4% compared to the previous season. And while Rabi sowing has been fine, I think for some crops it has suffered. So overall, on the agri side, we don't expect strong boost coming from that sector either.
Absolutely, that strong boost from agri would be something that is missing, given that there's a lackluster summer crop production. That's an issue on that front. Lastly, Aurodeep, just in terms of service sector growth, that we are expecting a growth on that front, but specifically in that, what do you see would be a possibility of leading the growth over there in terms of anything specific on that front?
I mean, look, on services, for me, trade, hotel, transport, communication, I think, is a very important barometer in terms of how general consumption growth is, because that is that is a reflection of domestic demand. It's you and people like us sort of going out, buying stuff, getting into taxis and planes. So I think that's an important barometer. The financial service, real estate, professional services, that should be relatively fine. That should be relatively strong in this quarter, particularly with credit growth being fine. But I guess in terms of sector, the one thing to watch out for is trade, hotel, transports, and also on the construction side, which has been a major driver of growth on the GVA front.
Have you on board. Thanks so much for joining in and sharing with us those details.